Hi all and welcome to our weekly report. The week begins with a very light calendar on Monday and Tuesday. On Wednesday, European equities and euro currency crosses volatility could be impacted by ECB rate decision, which is followed by the monetary policy statement and press conference. US dollar currency crosses will possibly react to the release of US CPI data and also FOMC minutes. Sterling FX and UK equity traders will pay attention to any news coming out of the European Council summit, which is also scheduled for Wednesday. The main point of interest on Thursday is reserved for Chinese inflation indication with CPI and PPI data releases. The week will finish on Friday with the release of Chinese imports, exports and trade balance data. We should also mention that Friday, 12th of April, is the current Brexit deadline date. So any changes to the current expectations could likely impact volatility across sterling currency crosses and also UK equities. Now, let's take a look at few markets. This is the intraday price action based in 4-hourly time frame of a euro dollar. It appears to be capped by multiple moving averages, 20 and 50 in this case, and also this falling resistance trend line, which is relevant in end of day time frame. So the current price action is coiling, potentially forming another bearish continuation pattern, capped by 112.55. Bears appear to be in control below that level, especially with the loss of these current lows and the spike lower towards 111.80 support. Confirmed loss of that level could open up the way for a retest of deeper downside supports towards 111.33, possibly 111. Only the end of day close below 111 could open up the way for a deeper retracement towards 1.10. Alternatively, either a pullback into 111.80 and a breakout higher, or a breakout from the current lows and the end of day close above this 112.55 resistance area would then potentially target additional upside resistances, initially towards 1.13, which is our nice and round number, possibly even 113.71.14, which would be this falling resistance trend line and also the cluster of these previous highs. Only the end of day close above 1.14 would negate the current bearish prevailing trend and open up the way for the retest of higher upside resistances towards 1.15. Cable in 4-hourly time frame is currently testing major level, key psychologically important level 1.30. Yet again, nice and round number. The price action potentially looks like something that could become a bullish flag formation with multiple touches to the upside. 1, 2, 3, 1, 2. There is no third touch to the bottom. So bulls appear to be in control initially above this 1.30, potentially targeting resistance at 130.90. Only a breakout above that level and end of day close above that level would open up the way for a spike higher towards 1.32. Confirmed breakout and end of day close above 1.32 resistance is required for a bullish reaction, potentially opening up the way for the retest of 1.30. 380, 1.34. Alternatively, either a rally into this 130.90 resistance zone and the sell-off, or the loss of these current lows and the round number of 1.30 would open up the way for a deeper pullback towards a significant downside support towards 129, which would be the third touch of this falling resistance, falling support trend line. Only the end of day close below that 1.29 would negate this as a potential bull flag and open up the way for the retest of 1.28, possibly even 1.27 to the downside. Dollar yen is nicely uptrending with US dollar strength clearly visible above that 111 level, which is identified by the breakout of this falling resistance trend line. The price action is creating the sequence of higher highs and higher lows above rising multiple moving averages. Bulls appear to be in control above this 111 level, so either a pullback from the current levels, which is in 111.70 to 111, and a breakout from there. So that would be like a breakout and a retest would support bullish outcome, potentially targeting 112 initially, 112.20, which is the sequence of these highs here. Breakouts above that level would open up the way for the retest of 113, 113.40 levels. Alternatively, only a dip lower and end of day close below 111 would likely open up the way for a deeper retracement towards additional supports at 110.60, 110 initially. Confirm loss of these two levels or that support zone would then turn the outlook to negative, therefore bearish, potentially targeting 109.20, 107.80. Aussie dollar in end of day time frame is downtrending. This is 4-hourly time frame price action, which is going sideways and potentially, just potentially, is starting to form something that could turn into a inverted head and shoulder pattern with left shoulder clearly visible here, head with this lower low, and now we have a first higher low which could turn into a right shoulder. Now the key level for us to watch is this red trend line here, which is the end of day daily trend line, and also 200 period moving average in end of day time frame, pointing to major resistance at spot 72. The current resistance is capped by spot 71.50, which could become this neckline of this inverted head and shoulder pattern. So if we see a breakout from the current spot 71 towards 71.50 and a breakout above that level and spike into spot 72, that will be a resistance in end of day time frame, so we could expect some consolidation. But this inverted head and shoulder pattern could potentially become a little bit more obvious at that time, especially with the end of day breakout above spot 72. So the end of day close above that level, then it would open up the way for a retest of higher upside resistances towards 72.75, spot 73 to the upside. Alternatively, either a rally into 71.50 and a pullback, or the loss of these current levels and a gradual pullback lower would negate this inverted head and shoulder pattern, potentially targeting supports initially towards 70.70, 70.24, possibly even spot 70 to the downside. Gold appears to be bearish with stronger dollar, and what we are seeing at the moment, we are seeing this sideways consolidation price range around 1290 area. Bears appear to be in control because the price is currently below multiple moving averages in 4-hourly time frame and also below this falling resistance trend line. Apologies, it should have been colored red. Now this was a previous support trend line here, which is now newly found resistance. So X marks the spot here at 13.15, 13.14 level as a major resistance. Now, the initial resistance to the upside is at 1300, nice and round number. So if we see a spike lower from the current lows and a dip towards 1280 and then retest from underneath as a newly found resistance, then this potential bear flag would come into play, potentially targeting deeper downside retracements towards 1265, which would be a symmetrical move lower based on this flag pole of the bear flag extended at the point of the breakout to the downside. Only a confirmed loss of 1265 would negate this, would additionally incentivize bulls to engage, potentially targeting deeper downside retracements towards 1250, 1240, possibly even 1230 over a longer period of time. Alternatively, if we see a confirmed breakout above these current highs and the spike above 1300, the next logical level is obviously that 1350, so only a breakout above that level and a retest from above as a newly found support, because that's a resistance, and resistance breakout newly found support would open up the way for the retest of 1330, 1337, possibly even 1340 on the upside. The last thing that I want to talk to you about is crude, WTI crude. That's the inventories are coming out on Wednesday as well. So the Wednesday is probably the busiest day of the week for us. But crude oil is uptrending quite nicely. We had inventories data which pointed to a massive oversupply based on the expectation, but and the very crude oil had a very shallow pullback lower towards 62 and spiked higher. So now bulls are in complete control here with the sequence of higher highs and higher lows. The price is moving higher above rising multiple moving averages and also supported by this rising trend line. So the key level for us to watch at the moment is at 62.35, 62.61.40. So that's a major support zone. So either a pullback into that level and a rally from here would be bullish. Also a pullback to that level, a loss of that level and dip lower towards 60, which is a nice and round number. It's a pivotal level as well. It's also the cluster of these previous highs. Would also incentivize bulls to engage, potentially targeting higher upsides towards 63, 64, possibly even 65 over the medium term. Alternatively, only a deeper retracement and the end of day close above this 60 level would then negate this current uptrending market conditions and the prevailing trend and potentially target deeper downside supports towards 59, 57.30, possibly even 54.70 to the downside. Thank you for watching. Thank you for listening. Stay safe. Happy trading, and I'll talk to you soon. Bye for now.